Nvidia earnings delivered the goods, but the market still punished them anyway. How's it, guys? Interesting day yesterday with a lot of chop in equities. The big picture looks like a bit of fatigue. Major indexes eased back after their surge higher on Wednesday, with the downside we saw once again being led by technology. Now, it feels like tech is loved one day and hated the next, but yesterday's move lower in equities makes very little sense, and a lot of what you'll read from yesterday is just narrative fishing. I mean, yesterday Nvidia reported solid earnings with revenue close to 70 billion, 2 billion higher than estimated. EPS came in at a solid 1.62 as well. Forward guidance was positive as well, and initially markets liked the news and the stock was up about 2% afterwards. And then came yesterday where the stock got slammed down 5%, and now after the stock has fallen, suddenly financial media changed their tune and said that earnings and guidance wasn't as good as markets expected. I mean, give me a break. There was nothing wrong with their earnings or their guidance. When the stock was trading up, it was all good, and now that it's suddenly down, there is now concerns about growth comps and the durability of margins. Again, give me a break. I think it's probably more likely just some profit taking from these levels. The push lower was enough to ripple through technology across the board, with semiconductors hit quite hard yesterday as well. For now, it looks like a lot of narrative fishing, so just mind the chop. Over to commodities, also saw a lot of chop yesterday. Now, oil initially pushed higher on geopolitical tensions and then gave it all back as talks of progress in the negotiations between the US and Iran just cooled down some of those risk premiums. Gold held up slightly better on the day, again living out that hedging qualities. Over in FX, a couple of big moves there. The yen recovered from the prior day's losses, most likely supported by that risk of sentiment that we had across the board. The biggest mover though was the pound, was the weakest currency on the session by a large margin, with potential uncertainty on the political side back in focus. But it's important to remember that with the current inflation growth as well as policy expectations for the UK, most analysts will agree that the path of least resistance is tilted lower for sterling. So we should be surprised by strength in the currency and not by weakness like we saw yesterday. Now, for the day ahead, the ongoing chop fest in AI and technology will of course still be on the market's radar. Apart from that, we also have inflation data out for Japan, France, as well as Germany. And then later in the US session, we also have GDP data from Canada as well as PPI data from the US. Have a fantastic Friday and happy trading.